Yes. Okay, we got some yeses here. Cool. All right. Welcome, guys. It's been a little while since I did a webinar, a few months. And this time I wanted to talk about how to leverage human nature for day trading. And well, the truth is we're human beings, right? There's a lot of stuff in us that we can actually leverage and improve our day trading. I've been experimenting with this in the last few months and it's been amazing, really fantastic results. So I figured I'd share this with you. Let's get going. First things first, that disclaimer that you've all seen all the time. Nobody here is licensed to tell you what to do with your money. My opinion is those guys who are licensed, please be careful with them as well. It is your money. You decide how you put it at risk. And same old background thing. That picture is still stuck. I still haven't found one that catches more attention than that, so that's going to stay. Little background, born in Sri Lanka, grew up in Dubai, spent about 20 years in the United States, came back about 2 years ago. I was flying airplanes for a while over there in the United States. And then I got involved in a few different businesses, digital marketing, the family business, but really found my way in about 2017 with the financial markets, got into investing. And since 2019, I've been day trading and been here with BBT since from the very beginning of my day trading journey. And more recently, in the last 12 months or so, I've been doing a lot of mentoring and been a moderator as well. When I'm not trading, well, there's a lot of water sports and various extreme sports I like to get involved in. And I got two kids, so I'm their whole world, a single dad. So I spend as much time as I can with them. Day trading allows that. So yeah, everything works nicely. With that out of the way, I'd like to get into the same thing I always get into up front. The one principle that I think really, if you use it well, it provides fantastic results. The 80-20 principle, for those of you who haven't heard this before, basically it says that 80% of your results come from 20% of your efforts. And you'll find that 80% of your efforts are truly trivial and are a waste of your resources. They only give you about 20% of your results. So what's important is to identify those few really impactful activities and nail down those and just focus in on those. Do more of what's working and less of what isn't. And you'll get the majority of results you need to get without draining your time, your energy, your resources, and you can actually get out there and live your life instead of grinding away 20 hours a day. So, I really believe in this stuff. I've been using it, and the subject matter of today's webinar is definitely one of those really impactful things. It's a real 80-20 principle in trading. So let's get into it. This is the book on 80-20. Richard Koch wrote this. Probably the best book I've ever read. I'll have my kids read this before they can read. Probably right about now I'll give them an audiobook. It's a little advanced though. But definitely check it out, guys. Fantastic stuff. Here are some more examples of 80-20. Same stuff I've gone through in the previous webinars. You'll just look into the world around you, and you'll find that 80-20 exists everywhere. Now, that's not precise. It's not exactly 80 or 20. It doesn't have to even add up to 100. That's not the whole point. The point is you'll find that a few things drive the majority of results. So 80% of a company's output is produced by 20% of its workers. You'll find that 20% of the Earth's inhabitants cause 80% of the world's problems. You'll find that you wear most of your wardrobe 80% of the time. 20% of your wardrobe 80% of the time. 80% of a town's traffic is on 20% of its roads. I mean, just look at the world around you and you start noticing this happening all the time. And it's amazing when you can take advantage of it. So I wanted to show this here to you so you can be convinced that this works. All right, so human nature and day trading, that's the whole point of it today. So why is it important? Well, the truth is it's important because we are human beings and we can't avoid that, right? That's it. We're not ants or robots or dogs or whatever. We're all human beings. So we must acknowledge that. That's the first thing. And within acknowledging that you're a human being, you are an emotional creature. That's really the fact of it. Again, we're not robots. We're not algorithms. We are human beings, which means we have emotions. And we are actually good at it. We're good at emotions. We have it all the time, every minute of the day. Probably 5 different emotions through a day. Maybe more volatile people have mood swings more often. But the bigger picture of it is that we have emotions. And so if we know that, perhaps there's a way to take advantage of that, right? Anyways, the bigger picture here is we have so much in us that's very different from all creatures out there. and of course, different from algorithms and robots. And I keep bringing that up because we talk about trading and you got to trade like a robot, stick to your rules, all that stuff. That's all true. But at the end of the day, we still got to acknowledge that we are emotional creatures. So we got to keep that in mind, okay? Very, very important. So one of those emotions is trauma that I'm sure all of us being adults here would have experienced at some point, at some level in our life, trauma. So let's break this one down a little bit because this really is important for trading, at least the way I like to use it. So the two elements to trauma, it's two basic elements, are recency and intensity. So if something happened really recently and it was really intense, it's likely to impact your behavior today as compared to something that happened a long time ago, let's say a year ago, and it wasn't so intense. It's not going to have such a profound impact on you here and now today. So the way I like to define trauma really is something that was very recent and very intense. Like yesterday's levels, yesterday's high, that was an intense level, right? Why? Because, well, that was the absolute high. It didn't go one penny above that, right? It got shot down from there. The sellers were sitting there, just as an example. And it was recent. It was just yesterday. So that level is firmly in play. See how I'm translating using the elements of trauma as a human being into the stock charts. It really is amazing. So all I'm doing here is translating a few human elements into trading elements. And let's find some of that. So here's a chart. Look at this day. This is a 30-minute chart right here, okay? This is the previous day. This is the current day of trading. On this day, this red line was the high. This line here was the open. This was the low. This is the closing price, all right? All of these levels were very recent, and they're all intense. That adds up to trauma. I call them trauma levels or traumatic levels. I'm just, again, taking from all the human nature stuff. So they're trauma because they happened recently, and they're intense. Look at this one. Not one penny lower. Absolutely right there. So the low of the day is in play. It's important. The high of the day, same thing. The opening price and the end of the auction, the closing price. Really interesting. Post-market, it sits around about the close. Then pre-market, it pops up above the close, and it's pretty firmly holding the close as support. This level here is holding as resistance, which is what? It is also a trauma level. It's from 2 days prior. It's not on this chart, but this was either the high or low of the previous day. And you can see how that's being respected as well. So you understand trauma, and you just translate it to the charts here, and you can really start to lean on these levels. I've been doing a lot of this, leaning on these very, very recent, very intense levels. Just, again, stealing from the human nature books, basically. And so before the market opens, you know that the previous day's close is support. And you know that this particular level from 2 days ago is firm resistance. You also know that if it gets down into this area, you have this low as firm support, and you have the nice round number, 180, right next to it. You might as well just use the round number. Usually you'll find lots of liquidity right there. So, but as it opens up here just above the previous day's close. So right there, the market opens. What does it do right up front? Well, it has a transaction. That's the opening price. Okay, that line gets drawn as the market opens. And that's another very important level. That is recent, as it's real time, quite literally just opened. And it's really intense because that's the first transaction of the day. That's always a significant point in when it comes to stock charts. So that level is important. What it does, in the first few seconds, it pops up and it pops right down through the opening price. You're thinking, okay, it was thinking it was support, now it's thinking it's resistance. All right. Very quickly, again, what does it do? Within those first few seconds of the open, literally, it drops what was pretty serious support here, the previous day's close, which confirmed it was support in the pre-market. And right now, right as it opens, it confirms to you that it is now resistance. Comes down. Ideally, you're watching it pop down, and with the volatility in the first minute, you can watch it go and hit its head back up on that, basically retesting that and then shooting down. So if you're able to read this stuff early on, I mean, this is right at the open. I'll show you a few charts where this happens later in the day as well. If you're able to read the price action off of these levels, you can lean on this. Once you're convinced that this previous day's close was support and now you're convinced it's resistance, you can take a short right about there. Stop loss right above the level. And you're getting really good risk to reward going down to the target. And you know that's the target because that's where it found buyers most recently, a very intense, very traumatic level, right? Right about 180. And so that's pretty much the trade I took right here. That was the whole idea. Getting involved here as it broke previous day's close, just buying put options. I just like to do it with options, and taking it off at the target right about there. That's it. Simple. So really just kind of understanding a little bit of human nature and translating it to trading. And I found that you can actually use this stuff. These levels are significant. The problem is when something gaps up or gaps down. Well, these levels are no longer in play. Yesterday's levels, well, that's a different game. So we're not talking about that in today's webinar. I'm talking about things that are opening up pretty close to yesterday's action or the day before. And you have these big Mag 7 stocks that are pretty much every day in play. So you can really put them on your list and watch how they behave off of previous day's levels, the previous 48 hours, quite literally. These are nice, flat, simple levels that all you got to do is watch the price action. And if you're able to convince yourself, or if the price action convinces you that it's respecting that level, off you go. You have a trade. And if you have an asymmetric risk to reward opportunity with that, you get these kinds of opportunities. And these are nice, clean, simple trades that happen fast right at the open. You can do it later too, and we'll get into a few of those. Here's another one, Tesla. All of these trades, by the way, are fairly recent, as in within the last 6 months or so. So Tesla, this is the price action on the previous day. In the post-market, it basically sat above previous day's close. Then the pre-market, it lost the close. It also lost what was very significant support, this traumatic level, which was the low on this day. So it loses that, confirms that what was support has become resistance. At this point, you know that this is resistance. You can treat this level as resistance until it tells you something else, right? It pops down here in the pre-market, which bounces off the low of 2 days ago. That's not even on this chart. So right there, you know that that's support. In the pre-market, you know now this is resistance, this is support. You don't have to sit and draw lines, find levels, even go searching for tickers. This is Tesla. You can basically watch it every day. Watch what it's doing at previous day's levels, just in the pre-market. So pre-market's telling you this is resistance, this is support. You already have a trade idea for the open. Look at this. This opens right about what was support is firm resistance. It opens just below that. That's the opening price. It pops up for a few seconds and pops right down. And it immediately loses the previous day's low, which is now support, confirming that it's support as it did in the pre-market, as well as at the same time pretty much loses the opening price. You have a lot of conviction right here. There's an opportunity to get involved in this move. And you know this is a target because that is support. So if you're getting involved here, you can pre-plan your target already. In this case, it happened to go down further. But the point is, that's all bonus over there. You can actually plan this trade before the open. And that's fun. You actually cheat the open in that way, in a funny way. You already know exactly where support and resistance is. Just wait for the price action to get in and confirm to you that what you think is resistance. And off you go. That's me getting involved in this Tesla one right there. Unfortunately, I took the whole thing off at the level. Should have probably held on to 10% for the remaining move. And that happens quite often too. So when you get to your target, probably a good idea to take off 90% of your position and hold on to a bit because you really don't know. The market might reward you, give you a little bonus. Yeah, never know. So there you go. It works on a lot of days. And here's another one on AMD. This one's fun too. Check it out. Oh, wait, did I skip one? Sorry, let me go back. Yeah, the Tesla one, and we'll get into the AMD one here. Was it pre-trade simulator and trading terminal? Yeah, Joey, that's right. Trading terminal is great. You can practice this stuff right there in the simulator. I've done plenty of that in the last, let's say, 12 months or so, getting involved in that and trying this stuff out and then applying it to real life trading. So check it out. On AMD, what's really fun here is this was the previous day's action, a great big day. Low was, what was it? Oh, way down. What am I looking at? Okay, oh, here we go. We got a high here. We got the close about here. And here's what's fun. Let's just jump right into the 1 minute stuff. You can see what happens. All of these levels, significant traumatic levels, are pretty much in one place, right? So here's another way to use them. As the price opens, kind of messes around with that level, with the area, right? It forms that opening range. And you don't have to really go and identify the opening range as in draw lines while this is happening. Let it simply respect traumatic levels, previous day's levels. No big deal, right? And so finally it does break out with, conviction. And then it makes a run for it. Oops. There we go. And so the next traumatic level is already on your chart. You know that's a target. So there's another opportunity. This is a very clean, nice, fun 5-minute ORV kind of setup. You can take this one. And the fun part on this that I really want to highlight is, look at this. This was the high of that previous day, right? That's the target. If you're entering this trade with a tight stop there, you're looking at something like 4-1, 5-1, get that target. And you expect this to be resistance. Why? Because it was resistance really recently. Traumatic, right? So it happens to have to break out of resistance, okay? And it confirms here. Look, it's confirming that it's support. Sitting around in this area, just finding support. It's telling you what was resistance has turned into support. Now, this is a potential other opportunity, second opportunity, right? So you can take that. Now, what you want to do, you don't have any more traumatic levels further up. This is where I start using the level 2. And I remember on this day, I found at 185 a massive order just sitting there. The price is basically gravitating towards that. So if you're able to get a good little entry once you are sure that what was resistance has turned into support, you can get an entry here. You can even scale into your position here. Stop loss is nice and tight. You might get about 3-1 if you really get a tight one in, 3-1 to 185. And so that's one of those opportunities that I took on this day. So you can see these levels really, in this style of trading, what I'm sharing with you is that these are really useful. I mean, quite literally, I've removed everything off my charts and I'm just leaning on these levels. And they work. They work really well. Again, just why do they work? Well, my whole thesis is trauma. Just taking from human nature. It happened recently. It happened yesterday. It was really intense. It didn't go one penny higher or lower. All right. Just taking from human trauma, applying it to the markets, just translation. Really. And really, the markets are nothing more than human beings playing with stocks. Nothing more. It's just mass psychology. So that's it. Human beings just expressing their views on stocks. So it looks like I've got a question here. Think we can omit the traumatic levels in day trading, 40 hours? Yeah, you can. All these charts I'm showing you here this is the way I used to trade about 6 months ago or even 3 months ago. I've actually removed these off my charts today. Today I'm talking about the last 1 month or so. And I'm trading exclusively the SPY and the SPX futures and options. And I'm actually drawing traumatic levels myself, which are a little bit more detailed than what we're talking about here. So let's get through this one, and then perhaps in the next presentation I can show you how that stuff works. But this is simple. DOS already draws it for you. So you can simply lean on it. And so what's also good about this is if you're planning to trade off of these levels, then you don't take a trade when it's not at these levels. So what that means is you're counteracting FOMO here. You're not taking entries like in this area, or maybe up in this area. You're just leaning on your levels. You want to get entries as close as possible to the levels. And you lean on them because you understand them. You know them. They're traumatic levels. They're very much in play. And you can get these kinds of big trades. When I leaned on them so much, I ended up trading pretty decent size with them. And I found lots of great results with it. So, I think it works. And it's simplicity. The simplicity is the beauty in this. I like that. It seems to, it works for me at least. I recommend it. Give it a go. Here on NVIDIA, check it out. Good fun. Support. At the open, what does it do? It comes down, pretty much bounces right off of that. It gets right back to the opening price. What does it do? Breaks right out, confirming that what was the opening price was resistance, confirming that it is support. Then it breaks through another significant level, which was the previous day's close, which turns out was pretty serious resistance in the pre-market, right? Confirming that breakout, retest, confirming that what was resistance is turned into support, bounces off, gives you about 3 or 4 minutes of opportunities to enter the trade. Next traumatic level is way up here, 925. Isn't that wild? Well, you could target 915 and 920. I mean, that's plenty already. Unlikely that it's going to retrace the entire big day's move. Yeah, it can happen. It happens. It's NVIDIA. Stuff like this happens. But you can look, in this case, that is so far away, it looks a little unrealistic. So check out the order book. You might see big orders at 915, 920, even further up. So you can plan these targets. All you got to do is wait for it to confirm that all this stuff is now support. In this case, it found support where it had found support previously, and then it broke out here. What was resistance turned into support, and off you go. You're on your way. These trades are huge. They're powerful. You don't have moving averages on the way to confuse you, to tell you it may be holding, it may not be holding, and you're not chasing them around. You're just entering as close as you can to levels with asymmetry on your side, as in you're getting 5-to-1 risk to reward on these trades. So really leaning in on, again, human nature, trauma stuff. Really fun, really good fun. Any questions on this so far? This is only one piece of it. There's another two more big pieces to it. Everyone still with me, or am I talking to myself? All good? Do you always wait for the retest? Yeah, I like to. It's better if you do. Here's the thing about retest. Check this out. On this chart, you know that this is support, right? Because it bounced off quite significantly on the previous day. Now, as it approaches this level, I wouldn't sit here too often waiting for a retest because I know this is support. If it really bounces off once, twice, within one candle, it bounces once or twice or three times, I might be interested. I'll just take a long there, stop loss right below. Off you go. Because it's doing nothing but confirming what I already know. I know that this is support. But when it's flipping a level, what was resistance, like right here on the previous day's close, I wanted to break out, confirm that what was resistance has flipped and now it is support. Then you can get those. And these ones that flip, the levels flip, I like them better because you get a lot more confirmation just waiting for a retest. And really, they tend to be quite explosive. Don't ask me why, but they tend to be quite explosive. Watch the tape. You'll see the buyers and sellers just really get excited, come in, and they want to let this thing rip. So, yeah, waiting for a retest always helps. You get more confirmation, more conviction on the trade, and off you go. So, yeah, waiting for resistance. Waiting for retest. That works. Well, there's a few different ways to do it. The thing is, you got to understand risk to reward, and I'll get to that a little bit in a minute here. But basically, you can get into your regular full risk if you like to, or if you like to scale into a trade, the more confirmation you get, the more you can scale in. So there's two different ways to enter trades. I do both, depending on how I'm seeing the price action. But there's nothing wrong with either one. You can do it either way. If you really haven't got a real grip on risk management yet, then I recommend just go with one size. Don't try to scale in with confirmation, tighten your stop, do all that stuff. Stick to one size, whatever your risk is per trade. Put on that size with a tight stop, asymmetry on your side, as in you're getting 5-to-1 sort of risk to reward, and off you go. Keep it simple until you really, get a good grip on it. Yeah. Cool. All right, here's another little one that I want to share with you. Fractal patterns, another human nature sort of thing. I talked about this in Vancouver, but I didn't get to show this video over there. So this is about a minute and a half. Let's take a look at this, and then we'll get into the details. Here we go. Just type it in here in the chat if you notice anything. We can talk about it. Yeah, Trader Blake, repeating circles. Patterns inside patterns, huh? Man, this is so trippy. You know what, Al? It may, but not the way I see it. I don't see this as fib retracements. Fibs do have other things in them that go into circles and various patterns, waves. But no, it's not for me. Al, man, Andrew's mushrooms. No. There's none of that around here where I am. And I can't function on that stuff. I'm not like him. I can't do that. I need to be clear-headed when I'm looking at this stuff, looking at the market. Yeah, coastlines, right, Fraser? Yeah, there's patterns on those too. You can find them all over YouTube. So yeah, that's the end of that. So this is cool. Fractal patterns, that's what these are called. Effectively, what they are is a pattern, and you look at this pattern, the further you zoom in, the further you lose perspective of what's going on. As in, you get into another pattern inside of the pattern, but it looks identical. It looks the same. And that's a fractal pattern. Basically, a pattern within a pattern that can be very disorienting. But it has a lot of advantages. It's actually all about, this is not just human nature. This is nature in general. And we'll get into that, how we can, again, translate this stuff into the markets. I mean, we're all here talking about ABCDs and breakout patterns, man. I look at this. This is a pattern. Fractals. And this stuff is powerful. So let's get into it. Look at this. A leaf, a tree, whatever you want to call it, a plant. If you zoom in into this, just like we did in that video, you'll see the same thing. Fractal patterns. You'll zoom in, and the further you zoom in, get really, really microscopic, you'll see the same thing that we saw in that video. It's a pattern within a pattern within a pattern. That's how these things grow. That's how human beings grow too, by the way, cells and everything. Same thing. And it's all about nature. All the same stuff. We have outer space, we have weather systems, all these plants, seashells as well. Amazing. So this stuff, fractal patterns, it occurs in nature all around us, including within us, as human beings, our bodies and everything. It's all fractal patterns. That's how things grow. That's how we grow. So I've basically been observing this stuff and figured if I could apply this to trading somehow and escape all these two-dimensional patterns and see if there's fractal patterns in the markets. And sure enough, it wasn't too much of a problem. I found it. Here's another one, snowflakes. We all know this one. It's a very popular fractal pattern known as the most beautiful fractal pattern out there in nature. You zoom into it, you get the same thing, just like coastlines. Really, it's quite amazing. So fractal patterns, let's take a look at this. Let's translate it to a stock chart. Right, this is all two-dimensional now. It looks boring, doesn't it, after looking at fractal patterns? But check this out. Up here, resistance, resistance, resistance. This is a 30-minute chart, okay? It just keeps resisting all the time. So when you zoom in, this is the bigger picture, 30-minute, you zoom into the 1 minute, and what does it do? It starts resisting. Well, I start seeing a fractal pattern. So I'm looking at the 30, and that's what it looked like resistance. You zoom into the 1 minute, and you're watching this 1 minute like a hawk right at the open, and you're watching it resist. There you go. That's the fractal pattern right there. Perhaps you'll see it resist and then come back and resist. That will resist twice, just like it done many times over here. I see this as fractal patterns. You're basically looking for a pattern within a pattern on the scale of time. And I've taken a lot of trades off of this stuff recently, and it's been really powerful stuff. So basically, what was resistance on a bigger chart should continue to be resistance on a smaller time frame. And you can use that stuff and get into it, get into that short position. That's how you can capture this kind of move right at the open. You'll be done with your day in about 5 minutes. Let's look at another one. Check this out. This is a little more complex. This is in a downtrend on a bigger picture, 30-minute, just in the last, 2.5 days. What does this look like on a 1 minute? Just zoom in. It's like a pattern within a pattern. Here it is. All this stuff you're seeing on this chart is happening inside of these candles right here, these 30-minute candles. So if you're able to pick this stuff, it's pretty powerful. So on this chart, on this day, you can see big downtrend, right? So you're thinking, okay, downtrend. But this is before the market opens. You're thinking downtrend, right? But downtrend from where? Well, same thing going back to those traumatic levels. You have these levels, previous day's levels, all right? In this case, previous day's close happened to be resistance, made a nice little 5-minute opening range, and began the downtrend. You have these opportunities. See, I'm kind of combining fractal patterns with traumatic levels. Now you're getting into something fun. So you can really start taking entries out here. 5-minute opening range breakout, or if you're able to see the resistance on the previous day's close, you can take that as nothing more than you're zooming in from a 30-minute into the 1 minute. You're kind of skewing time a little bit. But think of zooming in. Just that's the easy way I like to understand it. You're just zooming in, and if it starts to look the same as it does here, it presents an opportunity. It's a fractal pattern setup. And look at this one. It actually broke down. If you got in here, this would have been your target, which was the previous day's low, because you know that's support. So it hits that, turns out it breaks out, it retests, confirming that what was support over here has now turned into resistance, and it continues the fractal pattern. Same thing, same thing. Nice and smooth. That's me getting involved in this, buying put options and taking the trade. So there you go. More fractal patterns, right? This stuff is really interesting. So, I've really stopped looking at ABCDs and reversals and all these sorts of things. It's more about fractal patterns and base them off of traumatic levels. Now you're getting something pretty robust you can really lean on and trade off of. You can use them as risk management. And there's one more element I'll bring into it in a minute here. But this is a really nice, clean fractal pattern. This stuff is fun. Here, Tesla, again, check it out. See the bottom here, right? Sure enough, it's a bottom again. There's a false breakout. Came right back in the pre-market, bouncing off. Yeah. So on a fractal pattern level, you're seeing Support. You're seeing a double bottom. Look at this double bottom. Here's a bottom, pre-market, completes a double bottom right after the market opens. I'm seeing a double bottom right here. I'm seeing a double bottom right here after a downtrend. Perfect. That's a pattern within a pattern. And you kind of skew time a little bit. You can see this whole thing is happening inside of this candle. Nice and smooth. And this is a fantastic opportunity to get involved in a big trade. You have targets up here, these traumatic levels. Nice and smooth, right? So fractals are interesting. You don't just, it's not one-dimensional, as in you're just looking at what is support, what is resistance. You do that with the traumatic levels. Over here, you're really looking at patterns, as in a double bottom. You get a double bottom. Maybe you're looking at a big range over here and a breakout pattern. It broke out on the 30-minute and then a retest on the 1-minute. You could get stuff like that too. There's all kinds of patterns. I've traded this a lot in the last 6 months, and it's fascinating. Really, you can, again, use this stuff to plan your trades before the open. Literally 10 minutes before the open, you can sit there and make a plan. I'll be long off here. My profit target's up here. That's the primary target. And then whatever I get after that is a bonus. You can actually plan that stuff and get involved in the trade right at the open. I used to trade like this. In the chat room, those of you who were there, I used to be like this all the time the last few months. I've just shifted gears a little bit in the last 1 month or so. But this stuff is truly powerful, as in just amazing opportunities that have come around with this. So let's get into another one. Oh, well, that was one. Okay. So fractal patterns, why are they so important? And this kind of brings it back to us human beings. So the research out there says that humans experience less stress and better well-being when looking at nature, and this is driven by fractal patterns. Now, I don't know about you guys, but seriously, I find day trading to be a very stressful activity, okay? I don't think it's an easy job. You got to manage risk, you got to manage emotions, you lose some money, then you're worried about if you'll ever make it back, all that stuff, right? It's stressful. So why not introduce some elements that remove some of the stress? So I started, experimenting with this fractal pattern stuff, and hey, now the research says it works, and in my experience, it works. As in, just look at these patterns. If they're forming, you can take a trade on them without too much fuss. You can lean on it, removes the stress. Really, really good stuff. Again, so you're tapping into human nature here. You're managing the human being, as well as tapping into nature as the bigger picture, translating it onto a two-dimensional screen, and you're able to risk money on it. Isn't that cool? I love doing this stuff. So fun way to trade. Really, really fun. Let's take a look at this. Here's another one. I want to bring it all together with this point that I just think we don't talk about this one enough. So fractal patterns and traumatic levels, you can build strategies on that. You can build trade plans on that. You can trade the open on that stuff. All right. But there's one thing that if you don't get it right, you're never going to make money. You're absolutely never going to make money. I promise. At the same time, if you get it right, I can tell you that doesn't matter what your strategy is, you'll always make money. End of the quarter, check your P&L. You've made money. And that is asymmetry, risk versus reward. No matter what strategy you use, you really ought to build in asymmetry as a core piece of your strategy. So let's run a little exercise here, okay? And feel free to type into the chat. I'm watching the chat here too. So I'll make you a deal. We'll toss a coin. If it lands on tails, you lose $1, okay? If it lands on heads, you get $3. Cool? All right? Does that sound like a good offer? Yes, no? Sounds good to me. Says 50-50. Yeah, right? I'd take that. Yeah. So you got to look at that. Really, it's an offer, okay? When you're out there on the streets in your regular life, people make you an offer. If it's a bad offer, do you take it? Probably not. If it's a good offer, do you take it? Yeah, we do this every day, all the time. We go and buy stuff, buy coffee. Is it a good offer? Is it a good price? No, yes, whatever. You want asymmetry on your side, on the smallest level and the biggest levels. We do it every day. And we got to bring this from our daily lives into trading. This is critical. Okay, you don't take a bad offer. No asymmetry in your favor, no trade. That's how it goes. Really, you got to have asymmetry on your side. This is it right here. If you lose one. If you win a minimum of 3. So even if the fractal patterns and the traumatic levels and all the stuff you're looking at is a perfect setup, if it doesn't offer you an asymmetric risk to reward opportunity, do not take it. Just sit out the market. Just go away. Seriously, go away. You don't want to lose money. It's like you're intentionally losing money if you take trades anything less than 3 to 1. And I say 3 to 1 is a bare minimum. as in it should rarely be taking 3-to-1 trades. It should be typically 5-to-1 when you enter. Right? That is important, like seriously important stuff. So if you build in asymmetry, you're even that human nature stuff and strategies, even that you can throw it out the window. But you gotta have asymmetry, then everything works. It comes together. So let's look at a few things here and how these trades can be truly powerful, okay? When you get asymmetry on your side, you know you can afford to take many losers. No big deal, right? You can lose 5 trades. You have 1 or 2 that work. You've made plenty of money. No big deal. Here's the same chart we looked at earlier, okay, Microsoft. We saw the, what did we see? We saw the fractal pattern here, resistance up here, resistance up here. We saw the traumatic level, the opening price. It's resisting, which happens to be also resistance previously. You can take that trade, right? Same old stuff. But for now, for the rest of this presentation, I don't want you to look at the charts. Have a look at down here. Look at the P&L stuff. Look how the winners outweigh the losers. That's what's important. So even when you take trades that are small winners, it's really not good. As in, you shouldn't enter trades that offer you a small win. Only big wins. Like serious asymmetry, because you need to stop out. Remember the coin toss? It's an absolute garbage strategy. You toss a coin, decide to go long or short, right? 50-50 whether you make money or not. But you'll make money on that if you control asymmetry. If you stop out at that 1R stop and you hold it for your profit targets, then it works. And I'm exemplifying that here with the P&L on this particular day. A couple of losers and a couple of winners. Well, the winners are bigger. Nice and smooth, right? Here's another one. Same thing. Same chart we looked at on Tesla on this day. Look at that. There are losers, pretty heavy ones too. But the winners outweigh them. So what happens really when you trade with massive asymmetry on your side, you almost become a little fearless. And I've experienced this a bit. I even got a little cocky with this stuff and took on way more losses than I should have for a while. But that whole fear of taking a trade, of putting on risk, and you might lose your money, all that stuff, it gets counteracted a lot when you really embody and embrace asymmetry on a trade. That means you do not enter a perfect setup even. You do not enter until it really gives you asymmetry. Absolute, fantastic, beautiful asymmetry, like 5-to-1 stuff. So that really matters. Yeah, JC, yeah. Now this works perfectly well mathematically when you have exactly the same risk per trade. You've identified it. The way I trade with options and futures and stuff, I do have flexible risk, right? So for me, it's actually a little bit more to manage. It's a few more calculations I go through before I enter a trade. For now, I'm keeping it very, very simple and just really trying to share with you how important asymmetry is. The truth is you need the opportunity to stop out. You need it. Because really, no matter how perfect the fractal pattern might look or how perfect the traumatic levels might look and how perfectly the price is respecting them, if you don't have asymmetry on your side, you're still going to fail. Okay, because no matter how perfect it looks, it may not work out. The market doesn't owe you a thing. The market is just, it doesn't know that you exist. It doesn't know where your entry is, where your stop is, where your target. It doesn't know anything about you and doesn't care. It doesn't want to know. Okay, so it can easily fail. It's just 50-50. Every single strategy, even this right here, is 50-50 whether it works or not. Okay, so when you do enter, always put asymmetry on your side. Now you have the ability to stop out 3 or 4 times if you need to, and then 1 or 2 winners. That's all you need. Really, it's amazing. And really, end of the quarter, the law of large numbers works out. So you got to stay consistent and you got to be absolutely firm with yourself on when you put on a trade. Wait for that perfect setup and then wait for it to offer you perfect asymmetry. Not perfect, but massive asymmetry. When you get those 2 elements together, then put on the trade. Then you must put on the trade. Okay, otherwise you'll never make money, right? So you must. That's absolutely critical. So you got a few elements here. Now, if you bring them together, we have really simple, easy, and fun human nature setups like traumatic levels combined with fractal patterns, and then you do it with asymmetry. Well, that's how you get results like this. That's the way I've been able to do it in the last 6 months or 12 months or so since I've been scaling up and going into different instruments and stuff like that. Really, that's how it is. And it's really, really fun stuff. Again, asymmetry is what brings it together, as in that's the last piece of the puzzle. You do not enter until it offers you something that's kind of off the charts, like 5-to-1. You don't even think about it. You don't have to sit and calculate. It's just massive distance on the chart. Okay, take it. if you have to sit and calculate it, that means it's probably 3-1, 2-1, and you don't want to, that's not worth it. It's not worth your time, not worth your money, not worth your mental capital, all that stuff. And here we go, another one, asymmetry. We looked at this chart earlier, but look at that. Losers and the winners outweigh them. Same thing. You need to have these opportunities. You have to have this ability to take these losses, multiple of these losses, regularly. And then as in you can still get into the game. After you stop out and make a loss, you still can get in. Now you're doing it right. And the only way to do it is really with asymmetry on your side. So if you're risking, $5,000 on this trade, well, it should have about a $20,000 opportunity, for example, right? Whatever your risk management is, identify your risk per trade and use that on every trade, but do not enter a trade until you're convinced like you're going to get this kind of move, something big beyond your risk, like 5-1. And really, when you do it this way, what happens you'll find is that your trading becomes a lot slower. It's actually surprising how slow you trade when you're doing it right. It's nowhere near as fast and frenetic as it looks like, as is made popular all over YouTube. It's not. It's slow. It's almost boring, really. You should see the way I trade nowadays. I'd say I trade only one instrument, the SPY, and it's much slower than all this stuff. It's totally different. I'll share some of that soon. So here's the thing again. Same thing. You have to have the opportunity to stop out. Okay. So what should you do when you fail? Give up or try again, right? Same thing. You got to try again. You have to have the ability to try again, the opportunity. If you don't respect your stops, well, now you're messing around with your risk to reward, right? And you won't be able to enter again if you take a big stop out, much bigger than you planned for, right? It's not going to work. I promise you lose money. If you trade like that, please stop trading. Go to the simulator, learn some stuff, and come back. Do it that way. Otherwise, if you're doing it right, yeah, you'll stop out. I'll tell you, my win rate is probably 40%, 30%. It's even worse than a coin toss these days. Really, it's worse. But I make money. Every end of the quarter, it's always green. Why? Because the winners outweigh the losers. And you can plan that before you enter. Otherwise, if you can't figure it out before you enter the trade, don't enter the trade. Just sit it out. Come back tomorrow. No big deal. No big deal at all. Here it is again. Same thing, asymmetry, looking at the P&L there. The winners outweigh the losers, right? Same old story. Same thing. We already looked at this one. I don't know why this is on repeat. And I think we already looked at this one as well. Same thing. Use the chromatic levels, fractal patterns, use asymmetry, it all comes together. See, it's a bit of a trading system here that I've been using for about 6 months, or probably exploring for 12 months, using for 6 months. And fantastic, really. It really works. It's good stuff. Same thing. Oh boy, all these are on repeat. And here it is. This is where I got the idea from. Muhammad Ali. You don't lose if you get knocked down. You lose if you stay down. So you don't want to take a hit so hard that you can't get up again. That's the whole point. Keep your defense up, which is, your stop loss, right? And don't even get into the fight unless it offers you asymmetry. As in, really, you can make a big killing on it. That's the way to trade. And really, so you bring that together with cleaning up your charts, putting on just simple human nature stuff that I like. I think it's simple enough. Fractal patterns and chromatic levels, two of the key things in human nature and in nature in general, and then lock it in with massive asymmetry on a trade. And now you've got something you could really, really work with. And this is it. This is where, 5 years of experience in trading, this is where I've brought it to today. And it works. So that's why I want to share it with you guys. And I hope this made sense to you. Hope you liked it. And, this little piece. I forgot about that. Very important. The more you do something, the better you get at it, right? So let's get into this real quick. Flow. Flow is basically being in the zone, right? A lot of you may have heard of this stuff. So the way to be in the zone, athletes are, musicians are, a lot of people are when they're into something they like. It's very simple, really. The way to do it is your skill level has to be matched with the difficulty level of the task, the challenge. Once it's matched, then you're in the zone. You're kind of so focused, you lose track of time, and it's known as the optimal experience of the human being, right? So you really forget about time in a funny way, and you're just in there. Now, this is a very big human nature thing. Flow. You get into the zone, and this is the formula, really, of how to get into the zone. Now, the fun is, if your skill level is there, let's say, and that's where the difficulty is, the more you do it day in and day out, the better you get at it. Now your skill level's gone up, right? And if your difficulty level is still the same, now you're going to end up here in this boredom area. Now, that is not the optimal experience. This is where you start making bad decisions. You start trading just for the heck of it, or overtrade, whatever. You start doing stupid stuff, right? On the other side of it, if the difficulty is too hard and you haven't figured out, or built up your skills yet, you have anxiety. Same problem. You make stupid decisions. You don't want to be in these areas. You want to be here in the zone. And the thing is, the more you are in the zone, the higher your skill goes. Therefore, you must evolve. You must evolve what you're doing. This is all human nature. So your trading has to evolve. It can't stagnate. If you're getting good at something, good, be good at it. Very soon you realize you're into this category because you got good at it. Now you got to evolve. You start exploring other things. Like I was saying, I stopped looking at various chart patterns and I started looking at human nature stuff. And this is kind of where it came from for me. Just kind of being in the zone. I got excited looking at this stuff, and now I started applying it or translating it to stock charts. And that's how it goes. So you must always evolve. And when you are in this zone, really, you are truly, as a human being, in the zone. You lose track of time. You are really hyper-focused, but not anxious, not bored. It's really like the optimal experience and the optimal performance as well for a human being. Talk to any athletes, talk to any musicians. Everyone can talk to you about this. It's really powerful stuff. So you must be aware of this. So what you really ought to be aware of is, are you bored or are you anxious? If you are in those zones, well, something's not right. You got to work on what you're doing, either the difficulty or your skill. Ideally, you identify where your skill is and then manage the difficulty of what you're trying to do. Trade a simpler style or make it more complex if you need to. Not unnecessarily, of course, but I think you get the idea. You want to be in the zone. And once again, the more you are in the zone, the more you evolve, and you just kind of literally get off the charts. You get these really high-performing people in the world. That's really, really powerful stuff. So be aware of this. This is how I've progressed so far. Really, really, again, fascinating stuff. There it is, evolution. That's how evolution works. Flow is this. I mean, you get good at it, you get good at it, you get good at it. Off you go. Human nature, right? Same thing. Just wanted to put this picture out there to remind you of who we are in a funny way. That's the book on it, Flow. I can't even pronounce the name. Mihaly sits, whatever. I'm not going to try. But that book is fantastic. I read it about 10 years ago, I'd say. It's a tough read. I think it's a complicated read. I found it very difficult. But, yeah, managed to get through it. Very good stuff. If you want to dig in further into what flow is and how it works and the whole human experience and performing at the optimal level, taking advantage of human nature, all that stuff, this book is fantastic. One of those excellent, excellent books. And yeah, there you go. That's all I have for you today, guys. So if you want to find me, you know where to find me on Twitter or X nowadays, Instagram, email. Let me know if you're interested in mentorship. I spend a lot of time on that stuff these days. And if you happen to be in Dubai, please reach out. I'm happy to meet up. No big deal. It's always fun to meet other traders from all over. And happy to take questions now. Hope that made sense for you. And yeah, let me know if you have questions. I'll be here. I'm here now. Cool. Thank you, JC. Glad it works. Glad it made sense. Yeah. And anytime I put these presentations together, I always wonder, am I being like so abstract and way out there and people are just going to file out of the room? But no, I guess not. So thanks for hanging around. Trade SPX on DOS. Yeah, I do. Here, but you can't actually trade the SPX. Okay, and DOS has like a 20-minute delay. So I trade futures on the SPX. I trade options on the SPY. That's kind of what I'm working on right now. Yeah, you read Andrew's book, Let Profit Run Away. So you tried to move the stop loss. Okay. Yeah. So what you're looking at here, Teddy Bear Coconut, is I think you're looking at a trailing stop. So here's what I like to do when you're looking at trailing stops. I don't really like moving averages. They confuse me. So what you want to do is, if you're trading off of these traumatic levels, all right, you get from one level to another. Okay, take profits at that target. No big deal. And then if you're convinced the level is flipping, let's say you're long, it hits that level, it's resistance, but it breaks out, it retests, you can add back in, quite literally treat it as a new trade. Put your new stop loss right below that level. And off you go for the second leg. You can do it that way. That's one way that I like to do it. I've done plenty of that too. So now you're actually trading a trend without a moving average. Fun. Yeah, Mark, get into it. Yeah, implement it. Yep. And how often do I set up? Oh, Zainab. Oh, man. Okay, so Most recently, I was trading just 4 tickers every day without, blindly just trading them. Amazon, Nvidia, Tesla, and the hell? Amazon, Nvidia, Tesla, AMD. Oh gosh, there we go. AMD 4. And I'd get too many opportunities in the first half hour. Like too many that I'd be burnt out in the first 10 minutes. I'd be tired. So just trading off of these traumatic levels, fractal patterns, human nature, and doing it with options, yeah, be dead tired and done with the day by 10 or 15 minutes into the open. So plenty of opportunities, and you don't have to go chasing around low float garbage, GME. I mean, I don't know, all that stuff out there. That scares me. I don't know why you have to take on that kind of risk. Tony Tanny, yeah. What is confirmation? I assume you're talking about levels. So confirmation is when you have already seen that, let's say a level is resistance. It has been resistance. It is resistance. So then what I'm looking for is if it happens to break out of that level, right? It closes a 1-minute candle on the other side of that level. Ideally, that candle had plenty of volume to break out. Then wait for it to come back and retest that level, bouncing off the level, basically, proving that this level is now support. So what was resistance has turned into support. That's confirmation that resistance has turned to support, and you can use that for risk management. Take a trade off of that if you get asymmetry on your side. Yeah, Jay, SPX is delayed. So, I mean, I don't even watch the SPX yet. Take a look. Watch the futures, because those charts are really, they respect technical stuff. If you want to dig that stuff up, just watch the futures charts. And you get volume and everything in that. Yeah. Dave, asymmetry to me is a bare minimum of 3-to-1. And I'm saying that's a bare minimum. You should rarely be entering those kinds of trades. So you want it. So typically your trades are 5-to-1, 10-to-1 when you enter, your risk to reward. And so what that means is if it works, great, fantastic, make plenty of money, make up for 5 losses, whatever. If it stop out, no big deal, one small loss. And the other little detail on that, didn't want to bring it in today, but we can do it right now, is if you enter these massive asymmetric trades, it starts going in your favor, and let's say it gets halfway there and it stops going, it slows down, the speed, the momentum has slowed down. Well, scale out of it. You can partial out at that point, and you might take 50% off, 70% off, whatever, because now you don't know if it's going to continue or not. So take those partials, stick your stop loss at break even for what you've got left. And either it runs to your target or it stops you out. Either way, you've had a green trade, right? And when you do that on a massive asymmetric trade like an 8-to-1, then, when it goes halfway and it struggles and you take it off, well, you've already made 3-to-1, 4-to-1, which is already massive, right? So yeah, a little slightly more advanced, but yeah, that works. It really works. Amazing. You want to get options and futures. You need to master before you get into working on day trading. Still using DASIB. Yeah, Leon Mac. What you want to master is price action. Really master price action. Forget about options and futures. That's all leverage. I'm not gonna go here and tell you guys use leverage. No, man. Not until you've got risk management under control. You've got RVR, risk versus reward, under control. You have a style of trading you can really lean on that gives you confidence. For me, it's just leaning on human nature, whatever it happens to be for you. Once you really get consistent with that and confident with that, confidence comes from results. So probably 2 or 3 or 4 quarters of finding those results, consistency, then maybe explore options. Explore, guys, and start reading about it. Price action is first, really first. I mean, I traded 4.5 or 5 years just equities before I even looked at options in a serious way. So, I don't recommend it up front to begin with. Yeah, Belle, glad you liked it. Yeah. Cool. Good stuff. I'm glad I got this in an hour. I mean, I was putting this presentation together, and it would have been like 3 hours if I really put in all the material I wanted to. But, oh boy. Yeah, we get it in. Cool. Yeah, Kevin, glad you liked it. So go explore this stuff. I mean, just look at the world around you. Notice fractal patterns. Notice the 80-20 stuff. It's in the world around you, and then translate it onto your screen. Only with asymmetry. And that's it. It's not too complicated. You don't have to make this hard. Yeah, Mike, another presentation. Oh, boy. Okay, sure enough. Well, I am putting together a trading terminal course. Yeah. Forgot to tell you guys. Should have put it out here. But that will be ready end of this month, most likely. Almost done with the production. And this will be one piece of that. There's a lot of material in there. So there you go. That's my little pump. Look at Trading Terminal coming soon.
This happened,
Cool.
of course, like right
All right,
as
guys. Any other questions?
I'm getting
8
on the
p.m. I
meeting.
gotta go get my kids.
Yeah,
Get to school
I
tomorrow.
know.
Cool. Matthew, the course
So I'm very
will
curious
be
about what Michael has to
this
say. Oh,
strategy
hey, Michael.
that we discussed here
Hi,
will be
Mike.
one aspect of it. There's
I
many,
just see
many
the
other
top of
aspects
your head
involved
there.
That's far more detailed. We only had an hour here today, right? That's going to be multiple hours and various things. So yeah, much more comprehensive. Yeah, that's going to be fun.
Those are the planes
Cool.
that Michael flew in.
All right, guys. Any further questions, or are we good to go?
The